So, you've looked at SMSF property investing. You've run the numbers. At some point you thought, yeah, this actually makes sense for me. Then you tried to figure out the setup. Bare trusts, corporate trustees, independent legal advice, 5 different professionals who all need to be appointed in the right order before a single dollar moves. You've got 3 tabs deep into an ATO guidance note. You closed the laptop and you told yourself, I'll come back to it next weekend. That was 6 months ago. And the maths on waiting is brutal. If your 200K super balance is sitting in an industry fund at 7%, that return is compounding on 200K. But if that same 200K is the deposit on a 6 or 800K leverage property, 7% is compounding on the full asset value. Every year you delay, that gap gets bigger and it doesn't close. Last year, I helped a 41-year-old client with 230K in super and 0 SMSF experience to go from scratch to unconditional settlement in 14 weeks. Most of that time was simply knowing which professional to engage first, so no one was waiting on anyone else. That's what this video gives you. The exact sequence of professionals you need and when to engage them. What the trust structure actually looks like without the compliance language. And the one timing mistake that almost everyone mistakes because information online gets the order wrong. That adds 2 to 3 months to the process. By the end, you'll have the full setup map. No jargon, no theory, just the process step by step so you can get your SMSF property purchase moving this quarter. Every broker I know has a version of this conversation. Someone calls, they've got 200K or 250K in combined super, they've seen the leverage maths, they know SMSF property investing makes sense for them, and then they say the same thing. I started looking into the setup and I just got lost. It's not that they're not smart enough, the information environment is genuinely bad. You Google how to set up an SMSF and you get ATO guidance documents written for compliance officers, not for someone trying to work out whether to call an accountant or a broker first. Everything reads like it was designed to make you feel like you need a law degree before you're even allowed to proceed. When my wife and I set up our own SMSF, it started with just a throwaway comment from our accountant. Not a formal recommendation, just an off-the-cuff, you two should probably look into this. I was still pretty green in broking at the time, which actually turned out to be an advantage. Everything was hard. SMSF paperwork didn't stand out as uniquely intimidating because I didn't have a baseline for what normal lending looked like yet. I just dug in and learned it. Brokers who've been in the game for 8 or 10 years tend to have the opposite reaction. They look at an SMSF and see smaller loan sizes, more paperwork, a narrow pool of lenders, and they think, it's not worth my time. That's why a lot of them don't touch it. And that's why a lot of their clients never hear about it as an option. The setup is the hardest part of SMSF investing. Full stop. Once the structure is in place, it works for you permanently. The ongoing compliance is an annual audit and some reporting your accountant handles. Most people who abandon the process don't even realize they're quitting the steepest part of the curve right before it flattens out. An SMSF property purchase isn't something you sort out with one phone call to your bank. There are up to 5 professionals involved, and every single one needs to understand this specific niche. Not just lending, not just accounting, SMSF lending and SMSF accounting. Get the wrong person in any of those seats and the process either stalls or gets messy real quick in ways that cost you months. 1. An SMSF accountant. I always ask clients whether they have an accountant they work with, and most say yes. Then I ask whether that accountant has actually set up an SMSF before. The answer? Crickets. If your current accountant is the person you go to see once a year to lodge your tax return, that's not the same skill set. Setting up the funds, lodging it with ASIC, structuring the trust correctly, handling ongoing compliance, that requires someone who works in this space day to day. Number 2. A financial planner. Not mandatory, but it gets a lot more valuable when there's more than one member in the fund. You can actually have up to 6 members in an SMSF, and they don't have to be related. It could be a couple, they could be siblings. It could be 3 separate couples pooling their balances. If those members have different appetites, some wanting property, others wanting ETFs or shares, a planner actually maps out whether the fund's investment strategy actually accommodates everyone before anyone commits capital. Number 3, a broker who specializes in SMSF lending. You can't walk into CBA and ask for an SMSF loan. The big four don't do them anymore. The lender pool is narrow, the criteria is different, and the rates are tiered differently depending on your LVR. The sweet spot that I see with my clients is around 60 to 70% LVR on a combined balance of 250K plus. A generalist broker won't know which lenders to approach for that scenario or how to position it. Number 4, a buyer's agent. Most of the SMSF buyers I work with are Sydney-based, and the Sydney pricing usually means they're purchasing interstate. Brisbane, Adelaide, regional markets where the yield to price ratio makes more sense for a long-term retirement strategy. If you're buying in a market you've never set foot in, you need someone on the ground who can assess it through that lens, not the same lens you'd use for a personal investment property you plan to flip in 5 years. And number 5, a conveyancer or solicitor who understands SMSF transactions. They handle the independent legal advice, review the loan documentation, and make sure the contract aligns with the relevant state legislation. A standard resi conveyancer will miss the requirements that are specific to SMSF purchases, and those gaps don't actually surface until settlement, which is the worst possible time to discover them. Which one do people leave too late? Well, in my experience, it's actually the broker. Most people spend months working with their accountant to get the fund established, and then one of the two things happens. They get excited and they jump to browsing properties before they even know what they can borrow, or they wait until the compliance step is finalized before they even make the call. Both add time. And the reason comes down to how the timeline actually works. If you made it this far and the words bare trust still feel like they belong in a legal textbook, this is where that changes. Until you can see the structure mapped out, you won't understand why each of these 5 professionals exists or what they're responsible for. And that confusion is what makes the whole process feel bigger than it actually is. The structure has 4 parts. You have the SMSF itself. That's the fund. Your super balances roll into it, and it becomes the vehicle you invest through. Sitting alongside the SMSF is the corporate trustee. That's the legal entity that makes decisions on behalf of the fund. If there are 2 members, both of you are typically directors of that trustee company. Underneath the SMSF sits the bare trust. This is the part that turns people's heads to mush. But it's really straightforward once you hear it once. A bare trust is a holding entity. Its only job is to hold the property title while the loan is still active. The property can't sit directly inside the SMSF while there's debt attached to it. That's the regulation. The bare trust has its own trustee. So you've actually got 4 boxes. The SMSF, its corporate trustee, the bare trust, and the bare trust trustee. A couple of arrows connecting them. By the time most clients see these drawn out, they've already heard these terms from me, from their accountant, sometimes from their planner too. It usually takes 2 or 3 passes before it actually clicks, and that's normal. Nobody gets it the first time, but by the 3rd conversation, it stops feeling foreign and starts feeling like a diagram that you can actually read. Your accountant sets up most of this. Your solicitor handles the independent legal advice. You don't build the structure yourself. You just need to understand what you're looking at when somebody puts it in front of you, so that when your accountant says, we need to establish the bare trust before settlement, you know exactly what they mean and why. If there's one misconception that costs people more time than anything else in this process, it's the belief that every step needs to be finished before the next one can begin. Almost everyone makes this assumption, and it stretches a setup that should take weeks into one that just drags on for 3 to 5 months with nothing to show for it. Here's how it actually works. Your accountant creates the SMSF and lodges it with ASIC. Once the fund has a name and an ACN attached to it, the broker can get involved immediately. You don't need to wait for compliance status from ASIC. You don't need to wait for your industry fund to release the rollover into your cash management account. That stuff is processing in the background. While it's processing, the broker is already assessing the borrowing capacity of the fund, working out which lenders fit your scenario, and in a lot of cases, just initiating the pre-approval. The rollover, the compliance lodgement, the pre-approval, they run concurrently, not sequentially. The client I mentioned at the start of this video, 41 years old, 230K in combined super, 0 SMSF experience, took 14 weeks from establishment to unconditional settlement. And the reason that timeline held together wasn't because they moved unusually fast. It was because nobody was sitting idle waiting for somebody else to finish. Every professional was engaged at the right points, and the steps that could overlap did overlap. Most of the information online presents this as a linear checklist. Step 1, step 2, then step 3. That framing is what makes people think that the timeline is 6 months when it doesn't have to be. The process has fewer bottlenecks than you would expect, as long as you know which steps can run in parallel. That's the full setup roadmap. the 5 professionals, the trust structure, and the timeline. Now, if you've watched this and you're thinking, hang on, I haven't actually worked out whether SMSF property investing makes sense for my situation yet, that's the video to watch first. I break down the real numbers, the minimum balance where it genuinely makes financial sense, and the hard disqualifiers that mean you should wait 12 months before even starting this process. Watch that one next.